Well, first up, let's talk markets and where we are headed. Varun Goel, the head of equity at Nippon India AIF, is to discuss the market trends and fundamentals with us. Varun, morning, and thanks so much for joining in. This is Rima here. We've had a one-way run for the last 2 months. Do you think the tide has reversed and the markets could start correcting? How are you reading the market setup right now?
Good morning, Rima. Thanks for having me on the show. I think broadly, if you look at the Q1 earnings, they are more or less in line with expectations. Our sense is, for this year, we should have earnings growth somewhere between 10 to 15%. So if you look at the Nifty EPS of FY23 and FY24, we are looking at somewhere between 800 and 850 rupees on Nifty for FY23 and around 900 to 950, somewhere around that for FY24. On that basis, market is already trading at around 19 and a half times earnings. So I think market is a little more expensive than what has been the historical average. So one needs to be a little cautious here. I think selectively we remain optimistic on the banking, real estate, and the capital goods space. But I don't think from a benchmark indices point of view, there is a lot of upside left from this point of time.
Not much upside, Varun, but what about the downside?
Well, I think that's going to be a function of how the macro events play out. I think if crude stabilizes somewhere between $90 a barrel or lower, I think we should be okay. I think growth momentum in India continues to be extremely strong. So we have to wait and see how the festive season plays out. I think next 2-3 months are going to be extremely crucial for India. We are going to see how the festive season and then the Kharif crop output. So while rainfall has been a little patchy this time, one is hopeful that the overall agricultural production should be okay. So that's one. I think secondly, as far as the US situation is concerned and how the global inflation scenario plays out, that is also going to be extremely important. Our sense is if crude stays below 90, we should not see too many rate hikes, in India, at least from this point of time. So let's hope, crude stabilizes quickly and leads to stabilization of the macroeconomic situation in India.
All right. Hi, Varun. Good morning and thanks for joining us. In your portfolio, you do have exposure to a lot of these IT names, something like TCS, Mindtree. How would you look at this entire pack? And within IT, where do you find comfort? Is it the larger blue chip names, or do you think some of the mid caps perhaps look more attractive?
Well, I think in the last 3 months, we've seen very brutal selling as far as the IT names are concerned, both mid-cap and large-cap. Our sense is there is a very strong IT capex cycle which is going to play out in the next 3 years. I think some bit of correction seems to be overdone, especially in the mid-cap names where names have corrected 30, 40, 50%. So we are using this correction to add on to our positions in the mid-cap space, and we are looking at 15 to 20% compounding from here. Most of these companies have reasonable good balance sheets, positive cash flow generation, good ROEs, good dividend payouts. So I think CY22 is a year to accumulate some of these mid-cap and large-cap IT names.
Hi, Varun. Morning. Would you be able to tell us, some of your high conviction stocks or sectors?
Yeah, good morning, Samira. So I think mid-cap financials is a space on which we have turned bullish after a long time. I think if you look at since 2014, this will be the first year where we're looking at 12 to 13% kind of credit growth. We have FY19, which was an aberration with double-digit credit growth, but other than that, credit growth has been very muted. In this environment, we expect Tier 1 banks to have credit growth of 18 to 20%, and some of the mid-cap financials, both NBFCs and banks, should see fairly good credit growth. I think the balance sheets are fairly clean. There is an excess provisioning in the system, which should get reversed in the next few quarters. So we expect extremely strong earnings from some of the private sector mid-cap banks and NBFCs.
Varun, do you look at any of these new age companies? I mean, they've corrected a lot from the sky high valuations that they listed at. And, even in Q1, they did some of them did manage to spring quite a profit surprise. So do you think you would look at any of these newer companies now?
Well, I think we remain focused on cash flow generation and profit and profitability of the companies. I think most of the listings that we had last year had challenges in terms of cash flow generation and positive ROEs. So we would wait and be very discerning as far as some of these names are concerned. I think the market has much better opportunities at this point of time after the big correction that we have seen in the mid and small cap space. So I think the profitless tech as a theme we would continue to avoid.
Well, you have been saying avoid the profitless tech theme ever since we had those barrage of listings last year. But Varun, you said the rainfall has been a bit patchy, and that is something that you will track. to get a sense of the sowing. What impact will it have if the rainfall continues to trend below average, as we've seen up until now?
Well, if you look at the sowing data, I think especially for rice and some of the other staple crops, it has been little on the lower side. So we need to see how the agricultural season ends. I know the rural India, as we all know, has been a little sluggish. One hopes that the agricultural production goes up this year so that the rural demand can really catch up. I think the urban demand seems to be okay. The next 3-4 months are going to be a decider in terms of how quickly the rural demand can really come back.
Varun, what about global facing sectors? What is the call now?
I think we remain quite positive on IT, like I was saying, mid cap and large cap IT. I think also chemical space, which got significantly re-rated last year. I know a lot of multiples have corrected. I think one clear thing about chemical spaces, both specialty and generic, is that they're going to be extremely strong earnings growth for the next 5 to 10 years. One really has to pick and identify those companies which are real specialty chemicals and not commodity chemicals. I think in the short term, while results will be muted, if one were to take a 3 to 5 year view, we can definitely get 15 to 20% compounding in earnings in some of these specialty chemical names. So we are again using this correction as an opportunity to accumulate these stocks. Again, 22 is a great year to accumulate some of these export names. I think rupee should stabilize somewhere around 78, 79, which should also help in both the top line and bottom lines of some of these exporting names. So we remain quite positive from a medium to long term perspective.
Positive on IT over the medium to long term. Varun, your thesis is that the markets are unlikely to go up. They could consolidate or perhaps even correct depending on how the macro events play out. Now, typically, when there is a correction in the market, defensives do well. One of them is IT, that's perceived as a defensive. The other one are commodities and the pharmaceutical sector. Would you align your portfolio tactically to play any of these defensives in the period that we're going through a correction or even sideways consolidation?
I think pharma, as far as domestic pharma is concerned, we remain constructive. I think companies which are doing domestic formulations. So while there is always this risk of price caps and all, but I think overall the space should continue to grow at 10% plus. I think as far as the US pharma and the global generic opportunity is concerned, there are definitely some challenges in terms of margins and price erosion. So our focus would clearly be on the domestic formulation names. I think as far as taking tactical bets, I think we would continue to focus on the medium and long term perspective. I think 2 years markets have done extremely well. 22 is a year where we need to digest some of these gains and let some of the momentum kind of calm down, and then use 22 as a great portfolio which can give compounding from, let's say, 3, 4, 5 years. That's how we are looking at the markets.